Are we set for another run to the upside? Here's Craig Smith, a gold trader from Swiss America Trading. Craig, welcome back. Good to see you again. Now, we had this huge sell-off on Friday. It continued this morning. Now we're coming back to break even. I take it you think this was a momentary dip, a buying opportunity, do you?
Yeah, I do, Stuart, because we've seen the same thing in 2006 and 2008 on corrections. And apparently the gold market is not as optimistic about Mr. Bernanke's subdued expectations for inflation going forward.
But it's all
he did a wonderful job getting us.
Isn't it all about the dollar, though, Craig? I mean, when the dollar rises a little bit, gold goes down. I mean, you could see the point where if we're off and running with a slightly better recovery for the U.S. economy, the dollar could stop its precipitous fall and you could stop the gold rally.
Yeah, you could, Stuart, but I don't think that's going to happen. I mean, look at the language in Mr. Bernanke's statement today. He's going to keep interest rates for a period of time incredibly low. Obviously, that's not going to do much for the long-term value of the dollar. Look, the dollar is in a long-term bear market. It's been very orderly. We haven't had any major fits and starts, but there's no doubt about that the dollar's in a long-term slide. And we can expect more of that given the fact that the government continues to spend money we don't have, Stuart. They're doing nothing to address the balance in budget or the budget imbalances that we have or the deficits. And so I suspect the softer dollar is going to mean higher gold prices. Now, and look, I think Mr. Bernanke did a great job getting us through the financial crisis. I think we'd all would agree that's behind us. But there is a fear of there's an expectation of inflation coming back, Stuart. And for Mr. Bernanke today in his speech to be so sublime about the potential for inflation, I think is a little bit on the foolish side, quite frankly.
Okay, well, look, you're positioned in the marketplace as a gold trader. You're looking for a rally in the price of gold. You've staked out your position in the gold market for gold to go significantly above $1,200 an ounce. In the short run, what are you looking for? $1,250? $1,300? What is it?
Great question. I happen to believe that the downside is 1126. The next major support would be 1040. On the upside, I'm looking for 1558 during the first 2 quarters of 2010. Beyond that, I think we could see movements to as much as $1,600, $1,700. I don't subscribe to this camp that believes gold's going to $5,800 an ounce. I think the world would look like a pretty ugly place if that was to happen, Stuart.
So $1,500 is your sort of relatively near-term outlook, early part of next year, the spring of next year, could be up around $1,500. That's your upside.
Yeah, I think, well, it could be higher, but that's my minimal target that I'm looking for. In January of this past year on another network, I said we'd see gold at $1,250 by year's end. I was only off by $25. As you know, predicting the future is a very scary game, and I don't suggest I have a crystal ball. But look, you can't see the exponential increase of money on behalf of the G20, Stuart, and not expect to see some type of price inflation in the future. And I think for Mr. Bernanke to be this optimistic that he actually said today inflation may go down. I disagree. If gold increased 45% during this deflationary period, what will happen when we see a mild bit of inflation come back? All right, I think the prospects for gold look pretty good.
We got it. Craig Smith, thank you very much indeed. Come back and see us if and when we hit 1,500 or before then. Craig, thanks very much indeed.
Thank you, Stuart.
I got the Dow up 44. I've got gold just about at break-even point. Now I want to move on to healthcare reform.